All right, quick question. What happens when XRPL builders start stacking globally? Ripple quietly gets priced at $50 billion, and a bankruptcy case starts raising real questions about ownership, all at the same time. Yeah, let's talk about it. All right, let's start with Paris, because right now, all roads are leading right there. And I want to be clear about something. Paris Blockchain Week isn't just another crypto conference. This is where builders, capital, infrastructure are all colliding in real time. Now let's walk it out, date by date, so you understand the flow. April 11th through the 12th, you've got the Hack the Block XRPL Hackathon. We're talking DeFi, payments, real-world impact, and the Hack the Block winner will receive a 10,000 euro prize pool. That's approximately 11.5 thousand US dollars. So builders in the trenches, apply for your chance not just to win, but to connect with the movers and shakers in the ecosystem while showcasing your talents and achievements. And who knows, maybe you'll even find me judging the hackathon. April 14th, XRPL Zone Paris. This is where things get interesting. Product showcases, roadmap conversations, and direct access to the people actually building. April 15th, 3 to 3:45 p.m. Don't miss XRPL Commons panel discussion on stablecoins and payment infrastructure, because institutions are now part of the conversation. April 15th through the 16th, come check out XRPL Commons startup booths during the Paris Blockchain Week conference. This is where they'll be showcasing early stage projects. This is where you'll find signal before it becomes noise. And then April 15th from 7 to 10 p.m., XRP Community Night. And if you've been to one of these, you already know. This is where real relationships are built. So zoom out for a second. This isn't hype, this is ecosystem formation. And it doesn't stop there. Look at how this stacks up. April 27th, the Bitcoin conference. April 30th, XRP Las Vegas. May 5th, Consensus, Miami. June 4th for the AI DLT Forum. August 31st for the Vault back in Vegas. And October 27th, Ripple Swell, New York. Month after month after month. Momentum isn't slowing down, it's just ramping up. Now, before we go any further, let me ground you for a second, because as this parallel economy grows, so does the risk. And I say this often, blockchains don't get hacked, it's the people that do. So if you're in this space, seriously, you need to tighten up ship. That's why I point you to Practical Crypto Security by Chris Dangerfield. And what I like about this, it's not fluff, it's not fear-based, it's here's how the attackers actually think, here's where people mess up, and here's what you can do today. It's simple, practical, and applicable. So if you're holding real assets on chain, these are one of those things that you don't wait. So scan the QR code, get the discount, and go learn. Tell Chris that Fuentes sent you. Chris is an acclaimed developer in the XRP community.
If you've ever been on the other end of a phone call with someone that's just lost everything they've got, you'd have a reasonable idea what that feels like. And it's the most strange feeling you'll ever have, because on one hand, you've got this kind of like sheer feeling of like sorrow for the person that you're listening, who's literally crying her eyes out about what they've just lost. And on the other side, you've got this kind of like feeling of just sheer thankfulness that it wasn't you. And it's such a difficult thing to balance. And unless you've experienced it, you can't, it's very difficult to express how you feel in that moment. The point is that there's lots of resources that are out there, but they're scattered all over the place. And it's all very well and good saying, well, I know that I can go and I can put something into Google and find out how to create a secure password. Well, of course you can. You could probably do the same for two-factor authentication as well. But there's lots and lots and lots of things you need to be like thinking about to be like enhancing your own security. You kind of need to know what they are in order to be able to go and search for them. So what I've really done is I've taken my experience and my knowledge and I've pulled everything that's necessary from all the different places that it exists into a single resource. And I've also tried to summarize it in a way that's easier to understand. Like some of the things I've written, they take like a 20-page guide from NIST on password security, and I've summarized it into a 1.5-minute lesson for you so that you can understand it in an easy way. And so, yes, the information's out there, but I've just basically brought it all together into one place so that you don't have to, this particular guide to help people from avoiding that fate. So when you feel that, and then you know you've got the ability to do something about it to prevent other people from going down that same road, that's what drives someone like me to want to to want to do that.
Alrighty, now let's talk about something that caught my attention, because I threw this out on Twitter recently, kind of half probing, half testing the waters. I said, hey, Brad Garlinghouse, Ripple's CEO, I'm hearing chatter about Ripple's tender offer, $300 a share at about a $50 billion valuation. Is that real, or is this birdie a little early? Turns out, it was real, because that's not just a number, that's a signal. Private markets just don't throw around a $50 billion valuation for fun. That tells you how institutions are positioning, how early we still are, and just how information really moves in the private equity landscape. Because by the time it hits headlines, it's already been moving.
We made 2 big acquisitions last year, both for over $1 billion, and both of those have really overperformed our expectations. A company we bought, we now call Ripple Treasury, which is a treasury management platform. Think of it as a dashboard for CFOs, the ability to manage liquidity around the world. That is way ahead of our forecasts for both the end of last year, but also even Q1. We're going to have a record quarter. And then we bought a prime brokerage business, the largest non-bank prime brokerage business. It was called Hidden Road, now called Ripple Prime. They also have tripled their revenue run rate since we announced that acquisition. So super happy with both of those. But all of that is in service of how do we make XRP as a digital asset more useful, more trusted, with higher utility. That is our North Star of how we think about the world.
Now on the tech side, I've been spending a lot of time talking about Mangrove. Their CEO said he completed over 500,000 top crypto trading simulations, and XRP-focused trading simulations were coming out #1.
Speaking of XRP and the value, I started a little experiment last week. What I do, I play, I toy, my whole background, I write experiments and simulations. And I said, well, let me just look at the top 10 crypto assets over the last year, and let me run 500,000 different combinations of strategies on these over this last year. And the algorithm came up with this stuff. So when I search for the top algorithms by IRR and by number of trades and by win percentage, literally, even in a down market going from $3 to sub 150, the top 10 strategies are XRP strategies that have all outperformed holding the asset, holding Bitcoin, holding the S&P 500.
I want you to think about what this actually means, besides XRP being one of the best performing assets across the financial landscape. This isn't reacting to markets anymore. This is modeling outcomes, testing systems, optimizing behavior before deployment. That's a completely different game, all underpinned by cutting-edge technology on the bleeding edge. So when people ask, where is this all going? It's all right there. The XRPL plus AI plus simulations. That's modern day infrastructure. All right. Now I've got to shift gears for a second, because I'd be remiss if I didn't talk about Linqto, who was also in the trenches alongside many of us building on the XRP Ledger. You know I was a former employee, so this one's not theoretical for me. This is what's happening. Linqto's still in their Chapter 11 bankruptcy, and the current battle is over ownership of assets, specifically Circle shares, customer holdings, and even Linqto equity, being a former employee who was dedicated to the mission, and that mission was to democratize access to private equity. Circle's now a public company, so our claims to the underlying asset must be satisfied. Reminder, SPVs are bankruptcy remote vehicles. And here's where it really gets interesting. The debtors are arguing that these assets belong to the state, even after the company confirmed that the SPV structures were originally sound. So I don't agree with what's going on while everyone's being silent. Here's how Linqto actually worked, and let me simplify it for you. Linqto wasn't just matching buyers to sellers, they were sourcing private equity, purchasing it on their own balance sheet, and delivering it through a seamless experience. So from the user side, it was just a point, click and invest experience. No friction, no ROFR headaches. And here's another layer to this. I recall Linqto partnering with a company called Millennium Trust, but Millennium Trust isn't Millennium Trust anymore. As of January 17, 2024, they merged, and now they operate as Inspira Financial. So now you've got evolving custody structures, entity transitions, and a bankruptcy process trying to define ownership. And it's all happening at the same time. And I'll be honest, this reminds me of something that I just saw recently. There was a clip from Tucker Carlson talking about certain gold IRA providers, and what they were doing was packaging these IRA products, steering investors into specific bullion, marking those assets up to the point where those investors were essentially left holding the bag.
Over the past 2 decades, Americans, mostly conservative Americans seeking protection from market volatility and encouraged by media figures they trust, have poured hundreds of millions of dollars into commemorative gold coins.
So the way that it works is a dealer will enter into an exclusive distribution contract with a reputable mint like the Royal Canadian Mint, the British Royal Mint, the Perth Mint. And what they do is they say, hey, we want you guys to mint this coin for us, and we want to have the exclusive distribution capability in the United States. And the mint says, yes, we'll do this. This is what it costs. You pay for the mintage fees, you pay for the premiums to the mint, and then they give you the exclusive distribution for that coin in the United States.
Since the value of the coin, in theory, comes from the value of the gold or silver within it, these coins are technically bullion, and they can therefore be used in retirement accounts. That means effective salesmen can convince people to move their retirement savings into gold-backed IRAs. Unlike typical gold bars, however, the gold IRA industry coins are exclusive to the companies that sell them. The companies then massively mark up the price of those coins and tell customers that that price is justified because these are unique collector's items.
Folks ask the question, well, why is this marked up exponentially? Why is it so much more expensive than, say, a typical bullion coin? And the answer is very simple. Well, there's limited mintage, there's only so many of these, and we are the only ones that you can buy this from.
This model works because it relies on the trust built up over years between conservative media and the people who watch.
And the real issue here wasn't just the pricing, it was when things unravel, there was no clear accountability. Now, to be very clear, I'm not saying that's what's happening here, but what I am saying is when you see the complex structures, third-party custodians, changing entities, disputed ownerships, and the same executives hopping from shop to shop, it should at least make you pause and ask yourself, hey, what's going on here? Because at the end of the day, it all comes back to one question: who actually owns what? And more importantly, who gets to decide? Now compare that to a platform like Forge, where buyer meets seller, transaction goes through the approval process, capital gets locked up for long periods of time, a completely different experience from Linqto. Now here's the question. Forge is now involved in the liquidation process. So you have to ask yourself, and I'm asking this openly, did they benefit from Linqto on the way in, and now they're benefiting again on the way out? That might be something people should be thinking about. And here's my position. And just to be clear, what I had stated in court was simple. I object to any attempt to reclassify these assets, freeze value, or impair ownership without first determining what belongs to who. That's it. Ownership first, and then everything else. Moving on, let's talk about hooks versus EVM. Quick note for builders, because I've come across these statements from time to time. XRPL hooks versus EVM. People try to oversimplify it. Hooks equal programmable money behavior, while EVM equals programmable applications. Different layers, different purposes. Once you see that, everything starts to click. So zoom out. Events, they're accelerating. Capital is signaling. Infrastructure is evolving, and legal frameworks are being tested in real time. Anyways, I've got more content coming, especially around Mangrove, so tap in, like, comment, and subscribe, and send this to somebody who needs to hear it. Appreciate you all. Love you mucho.